Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, start trading Forex indices and commodities with up to 800k of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now for futures traders, Blue Guardian Futures offers up to 450k in funding with 100% profit on your first 15k. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit blueguardian.com or blueguardianfutures.com to start trading today and grab their limited time discount code.
Hey, what's going on, guys? It's Briggs Trades coming to you live with another week of breakdowns. Hope everybody's doing good, man. Hope everybody had a good week. Hope everybody had a good week. So what I want to do is I want to go over the weekly breakdowns like I usually do. And so again, if you guys don't know me, again, my name is Briggs Trades. I'm a day trader with about a decade of experience. Actually, it'll be a decade in about 2 weeks, which is crazy. My first day going live, I believe, was like March 6th, 2015. So it's been 10 years of a journey, and it's been an awesome journey. I'm getting better as a trader every day. And it's been a lot of ups and downs, a lot of character building, and it's crazy how you can find ways to improve yourself every day in something that you're really passionate about. So again, I've been doing this for about a decade. So I started in Forex, made the transition to futures about last year. And I'll kind of say I left the door open for Forex a little bit as far as the market goes. You know, I'm very invested in the prop firm space. I've got about a 1.72 and funded with various firms on the futures side. I made the transition to futures from Forex because I saw there wasn't a lot of prop firms on the Forex side that were that I felt comfortable in. And so now there's a couple of Forex firms that I'm looking at as far as prop firms go. So who knows, maybe I'll be back on the Forex side. But right now, you know, sticking with the futures things just because I like, you know, the futures market. I like the stability that the prop firms give you on that side. And then obviously, you know, if you're trading, you know, your own capital, trying to trade the indices, then you need to have a futures account pretty much in the US. So hopefully everybody enjoys that and you know, my background. But I love to see where people are calling in from. So if you guys, you know, as always, I love to see where people are calling in from around the world, around the country. Tony, what's going on, man? Grand Rising. Let's go. Skippo says, can we look at Jura 40? Yeah, we could look at German 40. Skip, I feel like I ask you this every week, man, but I feel like you're out of the country. Like you're in a different country. I could be wrong. You're not in the US. Yep, Jamaica. Yep, that's what it is. So shout out to Jamaica. Shout out to Baltimore. Like I said that before. I got family in Baltimore. I was just in Baltimore in August. In the city in Owings Mills. That's where my family is from. Lawrence, Massachusetts. Shout out to Lawrence, Massachusetts. Got Dallas, Texas. Brink said, I did over 500 pips and made a withdrawal. This is really real. And that's the crazy part, is that Tony's not even in the, I don't think Tony's in the mentorship, right? I think you're just in the chat and following along here, right? Like, I don't think you're in the mentorship. I could be wrong, but yeah, I mean, basically off of the stuff that I'm calling here publicly, right? And obviously, this is not investment advice, right? This is just educational advice. I'm huge into, if you're going to be a day trader and you're going to be a mentor to other people, you need to be very transparent about your ability to call price, right? And so I do this publicly. This is a free forum. Obviously, I have a mentorship group where I work more hands-on with students and things like that. But this is a free forum where I come here every week and I call price out, right? Because I want you guys to, have transparency in this industry. I feel like a lot of trading mentors are not transparent, right? So when they come on board and they ask you to sign up for courses and they ask you to do things, you don't really know if they're good or not. You don't know if they're legit or not. And I've had the ability to, over the last few months, I've done account flips, right? Like where I've taken, I hate using the word account flips, but I've taken accounts from 10,000 to 40,000, documented every step of the way. I did it twice now in my chats. And I've been able to show you guys that, hey, like this is a real skill set, and there are people who can really do this for real. And don't get caught up in the BS and the fakeness, right? Everybody wants a Lamborghini, everybody wants to be a millionaire, everybody wants to do that. That's cool, but what you got to ask yourself here is the person I'm learning from really, can they do this for me, right? And if they can't show you this stuff beforehand, then maybe they're not as real as you think. But that's all I'm saying. So shout out to Brazil. Brazil. Let's see. I don't know anything about Brazil. I just know it's a beautiful place to live, and there's a lot of fun things to do down there. Yeah, so like I said, Tony did over 500 pips last week from just the stuff that I'm calling out publicly. This is not even like my strategy. This is not even me working directly one-on-one with the live sessions, that type of thing. Is literally just from these calls, right? So again, not a signal service. This is not a signal service, but this is, basically a good opportunity for, obviously, again, you just see somebody who really do this with a lot of experience, but then also kind of match your own analysis up with this too, right? And if you're at the point where you want to join the mentorship, we can teach you entry techniques, we can teach you how to manage things. I'm working really heavy this year on putting together a psychological edge or a mental edge template for everyone, so we can start really working on the mental edge, because a lot of this, the technicals, in a year you can learn how to do most technicals, right? 6 months, a year, you can learn how to do that, but it takes a long time to learn how to manage your mental edge. And I think a lot of traders, what happens is they learn the technicals, they learn the fundamentals, but they don't really know how to manage their mental, right, during trading, or how to put systems in place that allow them to walk away. Because most times when you blow your account, you're probably blowing it in one day, right? Or you're damaging your account so much that it's pretty much unrecoverable in one day. So how do we stop that? How do we put a mental edge strategy up there? And that's one of the things that I'm gonna be working on. And I got a lot of templates and a lot of things that I'm gonna be giving my chat over the course of this year in my mentorship group. So, that's how to make our C game better, so we can kind of let our A game and B game shine. So Hugo, what's going on, man? I saw your Telegram message yesterday that you sent me, or yesterday or Friday. We'll talk about that on the call. I got some recommendations, I think, for some firms that might answer your question. So yeah, let's go ahead and get into it, right? So again, you guys know that I start with dollar index, right? So dollar index is the main overarching chart that I look at, because again, especially if you're a currency trader, I know there's a lot of Forex traders on here because we're global. So yeah, there's a lot of Forex traders on here because we're global. And because of that, you guys are trading currencies, you're trading like, Euro USD, USD JPY, GBP JPY. If you don't understand where dollar is going, you don't have a dollar analysis, then you're not going to be able to determine, where the market goes, and you won't have a bias for that built in as well. So this is just another confirmation that I use each week, right? Because if I understand where dollar is going, then I can understand probably where euro should go and where pound should go and the rest of the majors should go in relation to this. right? So again, dollar index needs to be analyzed every week, right? And so coming into dollar index, weekly time frame, right? So we've been in some chop over these past few weeks, man. We have been in some like crazy, crazy chop. And so it's a couple things here. So we really broke structure. We invalidated this BISI here and retested it. So there's a couple things that I'm looking at. We have the mean threshold of this order block that I talked about last week that I thought we could potentially go to. Last week was very like, we didn't really move as much as I thought we were going to move. Like we ended up really retesting that, and I thought we were going to test that earlier in the week and then drop. There was some news events that kind of set us off later in the week, and that's probably why we didn't get the movement. But really, what I've been looking at and what I called out last week was this order block here. And ideally, if we're going to move lower for the next few weeks, I want to see this violated. Move that up because that didn't look right. So consequent encroachment, you also might hear it referred to as mean threshold for an order block, but basically it's the middle 50% level of an order block. And so honestly, I want to see that violated, right? If we're going to keep going down with this downtrend. Now, as it stands right now, that's kind of the only thing that's causing me to hesitate a little bit on the downtrend. But other than that, we have broken market structure. We have invalidated fair value gaps. This is a lot of analysis that basically says that we're going to continue to go down. So I want to see the market really continue to drop. And honestly, this is the target that I'm looking at. But we got to get through this consequent encroachment too. So I will be looking for short opportunities. Well, I won't be trading dollar. So I guess, again, dollar is just how I do my analysis. But I'll be looking for the market to give us shorts until we get to this level here. And I'll especially be extremely bearish once we take out that 50% on that order block. So jumping down daily time frame really quickly. Again, there's really nothing here. I mean, this order block here. But there's nothing really here that I want to see. So ideally, if coming into the daily, I want to see the market really, we've already retested this and we've created a new order block here for a bearish run. So I want to see the market, trade back into this fair value gap here. We also have a volume imbalance here. If you zoom in, sorry, there's a lot of chicken scratch on my charts. We zoom in at this level here. Again, it's like at the 106.7 level. We have this volume imbalance right there. Oops. So that volume imbalance right there. So, and then in addition, we also have this SIBI here, right? This fair value gap right there from that low. It's right there. A little bit higher. That low to the high. So there's a lot of basically kind of like quote unquote resistance in this area that we can see the market flow into. So ideally, I want to see the market trade back up into this. Best case scenario, right? I want to see the market trade back up into this. Respect this order block. I would consider this like one big order block, right? Anytime we see multiple uptrends and a down run or the vice versa on an uptrend, I really consider this as like one big order block. Because if you go up a time frame to like a 2-day time frame, it's just going to be one candle. So I really consider that one big order block. But ideally, I want to see the market trade back into this range here. The third level that I'll be kind of looking for on the pullback for this week will be the consequent encroachment of this wick right here. So 3 levels for the pullback. Ideally, the market's probably just going to run to one of them and turn around. We'll look at news when this is over to see kind of when we think this might happen during the week. Oops. All right, see. CE, so it's right there. So ideally, that 106.61 level, this volume imbalance here kicks in at 106.68 and then 107. So this is going to be, I think this could be a very shallow run. And so what I'm looking for is a daily close below this. It can wick up here. On the smaller time frames, it can even close above this, but I want to see daily closes back below this. And I guess on the high end, we could retest this. Like, don't be surprised if we retest it. It just, like, I don't think we'll come back up here because this technically was the retest of this bigger inverted fair value gap here. So I don't think we'll come back up here. So ideally, I want to see the market really trade back into this. And then on the downside target, there's a couple levels. Obviously, we have that bigger low there, but I'm going to be looking at the low of last week, especially since that's a volume imbalance right there. So I want to see the market trade into that and see how we react once we get there. It's a volume imbalance here because the market closed here and then gapped up and opened there. So that is technically, a volume imbalance. So that's dollar index. So I'm bearish, man. I'm bearish. You can see the structure playing in. You can see this playing out in slow time. We're testing this this daily fair value gap right there. That lets me know that we're heading down. All right. You can see when we retested that, we stayed under consequent encroachment of that wick too. This is like a beautiful structure. It's choppy up here, but then once it starts breaking down, you can start to see it a little better. So this right here, aside from this order block here, CE, I really want to see the market reacts to this. But again, I'm looking here, especially if we close below this very convincingly. There's a volume imbalance right there too. So I'll just note this out because now I'm looking at downside targets and where we could hit and kind of stumble at on dollar. So I want to see how that reacts. Let's go to Euro futures. Let me hit the comment section real quick. So Euro futures is the same thing as Euro USD. And I called this out on Friday, right? So I said on a weekly level, we've been going through some chop, right? If you look at the last few weeks since September, we've been in a downtrend. It looks like we're trying to transition to an uptrend. There's a reason for this, and it's very clear on dollar. So again, dollar analysis says if dollar's going up, Euro futures should be, dollar's going down, Euro futures should be going up, right? Because if you think about Euro USD, currency pairs have inverse relationships. So one goes up, one goes down. So if dollar's going up, Euro should be going down. There's a couple levels here that I'm looking at that I think we could potentially run to on Euro. I think buy side liquidity here at 101.0558. And again, these numbers are going to be slightly different if you're trading Euro USD, right? But like on the high here is 1.0532. So it's a little slightly different. Right now, again, I'm trading futures. So this is the one that I'm rocking with. In the event that I ever go back to Forex, and who knows, I might at some point. I love Forex is my first love, so I might be back there one day. I also think it's cool to build a global audience. I think a lot of people globally are still trading more Forex than futures, but that's just me. So we'll see. I'll be back one day, to the Forex side. So okay, anyway, so if we're looking at the daily time frame here, so basically we've been in consolidation, but we've been in a downtrend here, and you can see the market really starting to transition to an uptrend. This is the high that I'm looking at because I think, one, if we close above this to get a significant run, then it's really going to start to transition. You can start to see the market really starting to make higher highs in the market here, coming up, taking highs, really starting to run towards buy-side liquidity. This it's kind of like my long-term hopeful target to get up here, but I really want to see how we react to these levels here. So this buy side level at 105.30 and then that 105.61. So these two, right? We inverted this initial fair value gap here. We closed below it, closed above it, and have had a real hard time closing below it again. So this is kind of what I initially called out, especially when we broke through there. Trading back down into that secondary fair value gap. I actually thought when we closed below this, and this is, for my students, I tell you guys to look at dollar analysis, and this is one of the reasons why. When we closed below this level, I was initially thinking, okay, man, this might be a short. But then I looked at dollar index and I was like, okay, dollar index did not invert its gap, right? Like that gap that we saw on dollar here. It didn't invert this. It was still pretty much respecting that gap. So I was like, okay, there's really a chance that this could just kind of be a little fake out and it's just kind of coloring outside the lines, right? Which is gonna happen, right? Like a lot of times, our gaps, levels, and it's not an exact science, right? And so sometimes you have to have multiple confirmations, because I was, at the end of the day, when this closed, I was ready to start looking short, and I didn't, thank God. But because I looked at dollar analysis, but that's why you need to have relationships with other pairs and in other charts to kind of see what they're doing too, and know which one should be moving. So we came back up. We've now respected this inverted gap for the second time. And we also, this is also that secondary gap, that BISI right there. So there's a lot of things telling us the market should go up. If you're a traditional retail trader, you're seeing this as an engulfing candlestick, right? And this is kind of the retest of that. So there's a lot of reasons as to why we should continue to go higher. And that's what I'm looking at. I'm looking at this thing to run higher. But I do not like this setup as much as I like pound. So let's go to pound futures. And I guess if I'm looking at areas that I think this could potentially pull back to, we also stayed inside that BISI there too, which is a good sign. I want to see maybe if we retest, if you see us grab last week's low, there could be some money there, like us wicking down here and then taking that out. Don't be surprised if something like that happens. We do something like that. Start running higher. The first target that I would be looking at, again, would be these highs. It's just a low resistance run here. There's a lot of liquidity right there. And then seeing if we can make a break up to there. So that's like a just shy of an 80 pip run from where we're currently sitting. So, that's what I'll be looking for. I don't like that setup though as much as I like pound. So GBP USD, again, or 6B1 futures. I like this one more. One, because it's giving me a lot more structure. It's not consolidating. Like the last one's kind of consolidating a little bit. And there's really nothing here that tells me the market should not move lower or should go lower at this point. We're still getting very clean bullish structure. We're respecting order blocks, that type of thing. So ideally, I want to see the market get up here. That's the level that I want to see at 1.2738. And then depending on how that works out, this is the secondary high that I'm looking at there. But I want to see the market get up here this week. And if we go to the 4 hours, we've already really kind of retested the low, really on both euro and pound. We've already kind of retested the low. So maybe I could see like a shallow run, like a very shallow run during Asia, or sorry, during London, like the beginning of London, to kind of kick things off, right? Like just maybe sweeping last week's, last Friday's low, like right here, and then taking things higher. Right, because it didn't really move and it's still respecting all the structure here. So I don't think I can see a world where we continue to go higher, right? And again, I'm looking there at that 1.237 level. That's my best case scenario. Again, we could run below here, take lows, and then go up. But I think that's kind of my best case scenario. So that's what I'll be looking for on 6B1. Let's go to NASDAQ. Let me go to the comment section and then we'll hop over to NASDAQ. So let's look at NQ, see what NQ is talking about. So NQ had a crazy reaction last week. And I didn't even realize that I got this open. So let me close that so you guys can see better. So NQ had a really crazy reaction last week. There's a lot of talk about tariffs and how that could be good, could be bad, and and a lot of economists, have been kind of predicting that we could see a downtrend because of that. So what do we have here? We have a lot. So we ran these highs. We have been trading in this range pretty much since Christmas. This consolidation. We ran up and grabbed the liquidity over these highs. And ideally, I wanted us to continue going higher, right? Because we can't bet against the bias really until something breaks or gives us a bearish reasoning for things. And we pretty much have it this week. So again, I wanted to see the market come into this level and then go higher because we're pretty much in a downtrend. Or we're pretty much in an uptrend still. We can't really bet against that until we get it. And so this is going to be very interesting to watch next week because I think us closing, we ran these highs and then pretty much inverted this gap. So this is going to be a very classic bearish setup, I think, this week. I'm going to be looking at two levels. I don't know long term where this is going to go. And you can't really predict that. You can only really predict where you think the next 3 to 5 days are going to go. And so ideally, obviously, since all this was violated, this is now inverted, right? This is now an inverted fair value gap. What I want to see the market do is retest here potentially, right? It could dig back up into this gap. It could be a next, Monday sets the initial high, or sets the initial low end of the fair value gap, and then Tuesday and Wednesday we're trading back into this inversion and then going lower, right? But I think this is going to fall over. I think us running these highs and then just totally disregarding that gap is kind of the market's way of saying that we're going lower. And we closed very close to the low. So I wouldn't even be surprised if we gapped lower. But this is going to be a bearish week, at least until we take out some liquidity. So I'm looking at this. This low is kind of like our first prominent low right here, 21,664. But then also this is a very prominent low too. So I'm going to be watching to see how we react here, but this could be a crazy reaction based on where we're at right now. A lot of consolidation, your manipulation up, and then when that gets taken out, it's definitely start of distribution, right? Again, it's one of those things that it's hard to call that in the moment because you're still very much in an uptrend on the year and on the weekly time frame. So you're not going to be able to catch everything, but you are going to be able to react to it once you get it. So ideally, I want to see the market retest the zone and then go lower. Best case scenario, best like Monday case scenario. But, I'm not too pressed to trade this. But I think this could be a really good setup. Same thing on ES. ES is, I like ES a little bit more because I see kind of like low resistance liquidity, right? Like I see these highs getting higher. So I wouldn't be surprised if that happens, but this might stay open. We're very far from this gap. So it could stay open and we could just keep running lower. I would not be surprised again if we opened up with a gap, but best case scenario, this is what I want to see. I want to see us rally, trade back up into this, maybe this order block here, but definitely this now inverted fair value gap, and then taking things lower. Lower being, I would look at this low here first initially at 5,983, and maybe if we're lucky we get this run here. So that's what I'd be looking for on ES. I was gonna say SPX. And then let's look at US30 YM. US30 and YM are the same thing. Again, if you trade Forex, it's going to be US30. If you trade futures, YM. So this is the Dow Jones. So kind of the same thing here. I told everybody that I wanted to see this inverted last week. Like I wanted to see that gap here inverted so we could take things to the high. And eventually we will get up here because it's the point of the markets, right? The point is to make money over time. We inverted that gap. I think everything is bearish. I think, yeah, this is all looking crazy bearish. I actually like US30 setup the most, which is rare. I rarely say that because I don't have a great relationship with US30. I'm not a huge fan of it. Trades a little bit different, but I think this is actually really good structure. I would want to see the market. Best case scenario, this is what I want to see happen. Like absolute best case. Boom. Right? Or trading back into whatever fair value gap this creates. So like the end of Monday might close high here and then we trade back into that gap and then go lower. But as of right now, we don't have that. So that's kind of what I want to see. But this gap right here is very clean, very open, and we're heading towards it. So I think this will stay open. Once we get here, this is anybody's best guess. We invert this, and I'm looking lows. I'm looking at the liquidity here at 42,000. So yeah, this is actually a pair that I don't trade, but I like the setup a lot. Like I think if we respect this, which I think we will because we inverted this, and we are currently respecting that order block, but we retest and go lower. I think could be a really cool, really good setup for people. So again, that's why I am. I'll look at German 40 in a second. Skippo has a question. So he said, should a trader increase their entry time frame, like the M15 if they're getting chopped up? Yeah, on the 1 to 5. I think you have to go with the time frame that you see clearest, right? Like no matter what your strategy is, right? You know that the higher the time frame, the truer the trend, right? So like you could be on a downtrend on the 15-minute, but the overall market is in an uptrend, right? And it's just a pullback or a very small retrace on the bigger picture. And I think you have to notice that when you start trading. So when you're trading, you have to look at the time frame that makes the most sense to you and gives you the overall picture of the bearish trend. I try not to trade out of line with the overall trend, right? So if the overall trend right now, we're chopping in this and we're kind of just looking for like internal range of liquidity. So like here and there, but like if this was had a directional bias, like we wanted to see this go up, I'm not looking for shorts if I think the market's going to go up, right? So I'm always looking at the bigger picture to see what the bigger trend is and then go with that and narrow it down to an entry time frame that makes sense. Maybe it's not the 1 minute, right? Maybe it's the 5 minute, the 15-minute. But you also have to know that you can't risk the same amount of money that you're risking on the 1 minute, on the 15-minute, right? So your position size needs to be a lot smaller because you're not going to be able to. You got to withstand a bigger swing in price. So it's one of those things where, and you have to know your personality. So like if you're trading like currencies, it's easier to trade higher time frames because the currencies is really good for swing trading. It's really good for like position trading over 1 to 2 days, and you can find something to get into on a day. If you're looking for very quick price swings on NASDAQ, on YM, then you have to down your lot size or your contract size because you can't trade with huge lots or you'll blow your account right in the swings. And the worst thing to do is blow your account and then watch the chart go in the direction that you thought it was going to go. So you have to be very careful about that. Let me look at German 40 really quickly, and then I think we'll call it a day. If you guys have any other questions, feel free to throw them in the chat. German 40 is in an uptrend, man. So I know it's an index, just like every other index, and they usually move very similarly. But as of now, I don't really have a reason to go bearish on this because it's just very bullish market structure. We're currently respecting a couple levels. It's fair value gap right there. We are on the verge of inverting it. This is where I would look to see the market. I would want to see the market position turn around this propulsion block. Actually, I'll be trading back into this. So it's not really a good trade like area to be trading. I want to see it come back to this level here. 21,864. It could turn around and do that, and it very well, would be okay if it did. But best case scenario, I want to see it get down to this area here, 21,878. So that's what I want to see. Yeah, so if you always have to use time frame alignment. So like if you can't, I mean, your entry has to be based on some idea of structure, right? And it's just easiest if you line your structure up to what's going on in the daily time frame and not the time frame you're looking at. You need to make sure those things align, right? Because you got to think about it like this, man. Got to think about it like this. So in this uptrend, I'm just going to zoom in on this right here, right? This uptrend that we're on right here, from that high to that low, right? That uptrend. If I go down to this is the daily time frame. If I go down to the 4-hour time frame, you're going to see a bunch of shorts, right? There's a bunch of bearish price activity in here, right? There's bearish price activity there. There's bearish price activity there. There's bearish price activity there, and there, right? Are you going to make more money on buys or sells in this? You're going to make more money on buys, right? Even though there's bearish activity. So if I zoom into, if I even go further down, right, and I go into this little text, that little box right there, and I jump down to an hourly time frame, right? That's a sell setup. That's somebody's breaking market structure and then very fair value. You have all those things, right? That's happening right there. But I mean, it's in the middle of an overall uptrend. So why would you want to take that when you know that at some point we're just going to kick back into the overall uptrend? I would rather focus all of my energy and effort in trying to find the next buy setup until we get a higher time frame break in market structure. And that's kind of what I tell my students is I want to align with the overall trend. So if we're bullish on the daily, bullish on the weekly, monthly, why am I taking sales? It's the easiest way to get chopped up. So I'm not trying to chase everything. I'm just trying to chase something that aligns with the idea that I have for the week. So what I show you guys, this is 90% of my work, right? 90% of my work is here. And then on the weekends, or on the weekdays, I'm really just trying to find trades that align with that. And I teach you guys how to do that in the mentorship. So, that's German 40 though. I want to see this continue to go higher, based on what we have here. This, I need something to invert. This is a little bit different than the other ones. Usually again, this will align more with what's going on the other indices. But we don't have anything bearish going on other than us trading back into this gap. So I still have to see things will go higher for now. But if we were to violate that order block here, the 50% level, at least in the minimum, and close below it, then I'd be looking for this to go lower. But it just hasn't happened yet. So it could mean the other ones are just kind of a fake out and it's going to continue to go back up. Most likely though, I think it's probably just slower and it hasn't happened yet. So that's just me. When price gets to an area of interest or you wait for a certain candlestick pattern, I have a system. There's a certain set list of things that I want to see happen. It's 3 to 5 things that I want to see this pattern do, or the market do. I don't really like patterns because patterns don't really people trade patterns and they don't really get the understanding of the market, right? It's just oh, I'm looking for an engulfing candlestick, or I'm looking for a doji, or I'm looking for, you know what I mean? I kind of moved away from that years ago because it didn't really give me any context into what the market is kind of thinking, right? So I have a certain systematic measure of things, and again, I teach that directly to my students. I can't give away all the sauce because it's kind of disrespectful to the people that do pay me, but there's certain things that I'm looking for on the lower time frames that give me a checklist of things that I'm looking for. And then when I see that, I take that, right? Especially if it lines up with my overall area of interest. and it lines up with my overall bias. Host, I don't, if I'm pronouncing your name wrong, I apologize. Hossein Harami said, "Hey, what's up, man? How's it going?" So yeah, that's pretty much all I got for you guys. I'll stay on for any other questions. If you guys are in my mentorship, you guys know that the 1 o'clock call is when we're going to break down questions and things like that for my actual mentorship group. You guys will see the link in the Discord for that. So. Oh, yeah, I guess I should probably do that shameless plug, right? Like, I probably might be the worst person at promoting my mentorship group ever. So there's two mentorship, like I have basically two ways to join the mentorship. The one is my free Discord, and that's just the general chat that I have, right? It's a general chat where you guys can kind of see a little bit what goes on, see some conversations, but then the actual mentorship is here. Let me see. I'll pull the link for you guys. This is the free group right here. Again, you guys can join that, and you won't get access to everything, but you can be in the chat, right? And you can kind of see some of the conversations that we have, but you won't get access to the course. You won't get access to the live sessions that I have, and these Sunday calls where I kind of help people with questions and things like that. And it's very structured for like, what do you guys need to grow? But this is the free chat. And then that's just access to the actual, just the actual Discord. Same Discord, just, different permissions, right? So that's the free chat. And then if you guys have been a part of this for a while, there is an option to, just become part of the actual mentorship. It's an ongoing mentorship. It's not, there's a course involved, but I consider a mentorship like constant weekly engagement and growth, right? It's not just like me selling you a course and being like, here you go. But should probably have a link in my actual Discord, huh? Yeah, it's this one right here. Sorry. This one right here is my link to the other Discord, which is the paid one. It gives you paid access and get access to everything that I was talking about today. So the course, the not one-on-one calls, but this small group calls with me on the Sundays, and then live trading. I live trade, try to at least 2 or 3 times a week, right? And I think the live trading actually makes a lot of sense because from a technical standpoint, right, there is a lot of stuff that like you don't get until you watch people do it, because a lot of trading is, it's like you see the tools, right? You can see an old high, you can see a break in market structure, you can see a gap, you can see whatever. But a lot of times it's really hard for people to put those things together because everything is situational, right? There's going to be times where I look at a fair value gap and I say, I want this to fail, or I want this to invert. And there's going to be other times where I'm like, I want this to hold, right? And like knowing that stuff, or like knowing how to use these tools and within situations, is something that you don't learn. You don't learn that without watching other people, right? And you got to have a lot of examples, or what should I be thinking here? Or I just got stopped out. What should I do next? Or that type of thing, right? So it's like, there's a lot of stuff there that you don't really get until you watch people do this live, and they can talk their way through it. And I'd like to think that a lot of people in my Discord, in my community, both the one Telegram one and the mentorship one, that they've gotten a lot of value from that. Just like how am I looking at these charts in real time? And am I trading? Am I over trading? Am I doing too much? Like, well, like, am I not doing enough? Like, am I managing my, like, all these things are things that like it's easier if someone holds your hand and shows you. And if you think about real traders that work on professional floors, right? Like, they have a strategy, they learn all these things, and it doesn't take them 5-10 years to do this. If I had a mentor, I probably would have been trading in like a year or two. Like, it probably would have taken like a year, maybe 2 years to pull all this stuff together. But I had to figure out a lot of stuff on my own. I had to go to different mentors, some of which were legit, some of which were not. I had to go to a bunch of different avenues, and I had to take my time, relearn strategy. I had to learn the strategy. When I learned the strategy, then I realized that a lot of the strategy actually was the mental side, and I had to manage that. And then I still, so there's a lot of pieces to actually being a good, successful trader over a multitude of wins and actually building your portfolio over time. But it all really starts with somebody, who can kind of hold your hand through things. And I hope that makes a lot of sense to people, and I hope that resonates with a lot of people, because I didn't start running until I had people hold my hand, to be completely honest. Because I needed to see what they were doing and how they were thinking. So yeah, so that is all I got for you guys. Again, I'll stay on for any other questions, but yeah, hopefully you guys enjoy all this. Hopefully you guys touch grass, go do something fun. Excuse me, go do something fun, and yeah, enjoy the rest of your week. But I'll stay on. I got like 2 or 3 minutes left for any questions. Oh, and then also too, on that Discord, the paid mentorship group, there's actually a free trial on that. So, the people there's two kind of things. So there's the free group where it's just access to the Discord chat. You guys can see me post. You can see me like throw a little bit of analysis or a little bit of like my thoughts on the markets there. Because sometimes I do updated analysis throughout the week, kind of like, hey, this is what I talked about on the call, but I think this will shift. Like, I think I might be off, or based on the information that we have now, maybe this isn't going to play out. Like, I'm looking at this on the weekends before the market opens up. So I sometimes update the chat with that stuff there. But the actual paid mentorship group, there's a free trial on that too. So you basically sign up for the actual thing. You get access to all the stuff that I talked about, and there's not any what am I trying to say? There's not any fees until for the first week. So like you pretty much get a 5-day trial. Hey Vicaveza, I didn't see. Can you go over inverted fair value gap? I didn't see any lessons on it on your course. Okay. Yeah. So essentially, fair value gap is this. And if you're in the course right now, again, I have a call at 1:00. So join that and we can talk more about it too. And it'll be like I'll throw the link in the chat for the paid students. But essentially, inverted fair value gap is each liquidity marker that I teach and that you see on online. It could be a PD array liquidity marker. Has basically 2 ways of looking at things. Right? There is what it's supposed to be used for, and then the inversion. Right? So in this case, this is a BISI. Right? This is pretty available stuff. But this is a BISI. And so when he trades into it, he wants the market to go higher, right? And so a lot of times I color code these so you guys can see them and understand them, but it trades into that, and we want to see the market go higher. If this inverts, you can almost think of this as kind of like support and resistance. This is literally the first example that I pulled up. Notice how when this broke, the market traded up to the high end of this gap here. Pretty much respected the bodies on to a T, and it was trading around ranging here and then fell over. So when a fair value gap doesn't hold or doesn't respect the direction that we wanted to see, a lot of times it'll be tied in with a break of market structure, right? But it also will invert, and we can almost use this as an opportunity to take things the opposite way. It's very similar to support and resistance, and how resistance turns into support and support turns into resistance. But these concepts are algorithmic. They're a little bit more precise than just like drawing a support line, or a lot of people draw supply and demand zones like this. They'll see a wick and they'll be like, okay, cool, that's my supply zone. It trades in here, I'll take it short. It's not very precise. It's not as precise as it could be. Whereas, this, I know the market's going to be drawn to this because there's liquidity in here, right? And so the concepts are similar, but this is basically an inversion fair value gap. So it's the idea that the market trades down or disrespects an old liquidity marker. Some people might call them PD arrays. And then trades back into it because there's orders in here that need to get mitigated and filled, right? And it takes things lower. The bodies of this candle, or the wicks of this candle, actually trade up into this higher to this imbalance, but the bodies respect that perfectly. Lets us know that this thing is probably going to continue to go lower, and it can be used as an opportunity. So depending on my bias, I might say like, yeah, I want this to invert, or I want this to not invert, or I want this to hold, right? And so again, everything is situational, but these are just the tools, right? And so the next phase is like, how do I put all these tools together? How do I use them in different circumstances, right? But that's an example of an inverted fair value gap. Technically, this is a BISI, right? A buy side imbalance, sell side inefficiency. So if you went through the course, you should know what that is, right? But when that fails, or if that fails, the market is telling us something. It's telling us maybe that we grabbed all the money that we need to get up here, and so now it's time to take things to a different level, right? And where do we run to on this? We ran to, looks like, consequent encroachment of this wick, right there. Yep. After a while, you can kind of start eyeballing these things, but this was probably news, I bet, or something crazy, because this is all 4 hour. If this is a 15-minute candle, it's 2:30. Yeah, that's probably news or something. But yeah, so when that falls apart, right, you want to see those things go lower. So on the retest. So hopefully that makes sense. If not, then hop on the call at 1 o'clock. We can talk more. That's what that call is for the mentorship students. It's really for anybody that has questions for the course. It also lets me know, like, what do I got to go and update for the course? Like, what do I got to change? Is there more videos I need to add? Is there more context? So kind of just like a litmus test or a barometer for like, what do I need to do more as a teacher? So that's always good too. So hopefully you guys enjoyed this class. It's 10:51 right now, so I'm gonna let you all go. Again, if y'all are not in the free chat, at least, you don't have to join the mentorship, but like join the free chat. It's gonna replace the Telegram that I've been running for the last year or so. I think it's a lot easier. Again, whoop.com/the profit playbook free, right? So check that out and join that. It's free. It's literally free. It's not going to cost you anything. It's not going to cost you anything now. It's not going to cost you anything tomorrow, right? And at least that aspect of the chat, right? The mentorship is there's obviously fees involved, but this is just a free resource. It's no different than joining the Top Step Discord or any of these other features Discords or whatever. So take advantage of that, man. It's a free resource. If I had that, I would have been profitable years ago, right? Someone's giving me something for free. So, all right, guys. So hopefully you guys enjoyed this. Any questions, you guys can hit me on social media. Again, my social media is Brinks Trades. That's on YouTube, Instagram, Snapchat. Actually, I'm not on Snapchat. YouTube, Instagram, TikTok, right? Those three big ones. So find me there, and then you guys can send me a message directly or message me in the Discord if you're in the chat. I prefer the Discord because that's the one I check the most often. I'm about to do like a social media break for the next month. So find me there. All right, guys. Peace.
Hey folks, what a view behind me. I'm at Blackbull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackbull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Blackbull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, start trading Forex indices and commodities with up to 800k of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now for futures traders, Blue Guardian Futures offers up to 450k in funding with 100% profit on your first 15k. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit blueguardian.com or blueguardianfutures.com to start trading today and grab their limited time discount code.